My name is Chuck Mackey. I'm with John Lothian News, and I'll be moderating the panel here today. The only shameless plug I will give for us is at John Lothian News, we are developing a crypto markets wiki that will be launching in June, so be on the lookout for that. If you have more information, interest in that, let me know. We're going to skip the whole tell me where you went to school type of introduction thing and get into the meat of things. But just to get the panel straight here, to my left, it's Bobby Cho from Cumberland Mining, Corey Johnson from Ripple, Ted Pendleton from Alpha Point, and then on the end, it's Rosario Ingargiola. Did I get that right? Wow, from OTCXN. You can see them, they have a booth here on the side as well. So we're gonna keep this going positive, just as the last panel did. And we're talking about institutional infrastructure, institutional liquidity. How do you see that we've developed in the last 6 to 12 months? And it's been phenomenal where we've been from where we were a year ago. What are some of the key things that you've seen as these markets for crypto have developed? You want to start, Bobby?
Sure, I'll
Down
start.
the line.
You know, I think over the last 6 to 12 months, you've seen a lot of companies that have been building mainly two solutions that we've seen, mostly on the custody side, but also on the execution, let's just call it price aggregator side of things. I still think it's still very, very early, but these are all the signs of kind of the community coming together and building products and services that more and more institutions will need and will want to see.
From our standard, you know, it's kind of interesting where there's this constant confusion about Ripple and our relationship to XRP, the digital asset, and the two are conflated to be the same by even the smart people in the New York Times this morning. Can't seem to tell the difference between the two. But we do possess a lot of XRP, which we're selling in the market. So we're very gently, very little in the fourth quarter. I think we were less than half of a percentage point of volume on any given day. But we're very aware of sort of what's happening in the markets. And I think what we saw in terms of liquidity in the marketplace, even though there's sort of more being introduced into the XRP marketplaces around the world, the 60 or so exchanges that trade it. But across the board, I think we saw, you know, with the big surge in November and certainly in December, we saw volumes go through the roof, and we've seen that pull back some in the first quarter. But even into January, there's a lot more volume than there was in March. It seems that now things have been picking up a little bit in terms of liquidity. But I think with all of these, the activity of the market starts to create more liquidity, more exchanges, trading more different, you know, types of assets. And so generally, there's probably more liquidity in the marketplace.
Yeah, it's a little bit of an unfair question because Alpha Point provides the infrastructure, and but part of the good thing we're seeing is that the more institutional types that come to us, the big sell sides and the buy sides, and the exchanges, we were ready for that because that's our space. We came from capital markets, but I think people are beginning to demand it, and I like the fact that we're all talking now about we like regulation, or at least it can use some regulation and some structure, because at least now we're over that hump, right? And I remember last year at conferences like this, this time of year, that wasn't the conversation. It was, when's it going to come, what's going to happen? So from an infrastructure standpoint, I think we're a long way down that road. I think custody, we'll get to that in a minute, but I think custody is the last piece that people from our neck of the woods, which include, you know, tier one capital markets players, are looking for to finish off the game.
And I think from our point of view, I think obviously last year ended in sort of a crescendo. There was with all that retail interest comes a lot of institutional interest. And I think there's still quite large gaps that are required to sort of see that wall of institutional money come into this space. But I think there's at least a realization and understanding of the nature of the solutions that are required to sort of make that a reality, to take the current state of crypto and bring it into sort of the real world institutional kind of infrastructure that we see. And to Bobby's point, I think there's been a lot more firms that have popped up that are starting to address some of those solutions. But I think there's still some really, really hard problems to solve, and that's what we at OTCXN are trying to address.
Well, let's segue into that then. What are the, I mean, we've all touched a little bit upon maybe gaps, but can you elucidate more on that? What are the most pressing concerns right here and now? And if you were rolling, Rosario.
Sure. I think from our point of view, there's kind of a vicious circle that is going on, and it all comes back to the absence of prime brokerage in the space. I think that's probably the single biggest problem. And what prime brokerage would mean for the space, for example, would be an ability for somebody to launch an ECN that aggregates all these other exchanges in a way where people can keep their assets at a custodian and not have to place assets at each of those exchanges, have much greater efficiency of capital by virtue of tokenizing or digitizing those assets that are being traded. And that's very much along the lines of the solution that we're developing, because we see that as sort of the biggest problem, ironically, not just in the crypto space. The sort of dearth of prime brokerage in the fiat FX space on the institutional side is also a huge problem that we're addressing as well.
I would say the same thing on across all asset classes. So we're doing, gold as well as real estate and other asset classes that are digital. So it's not just the crypto, and the same requirement is there for the larger capital markets players. They want to see the fixed infrastructure that's there, the typical workflow and process with a broker, and that sort of an institutional structure. And what we're beginning to do is take our 65 customers to see big custodial players and have those customers demand service that they're used to in the digital asset space. And again, it doesn't have to be crypto, it can be trading real estate. We have a $200 million real estate fund, for example. So that, I think it's, I don't want to be overly positive, but I think that day is coming really fast.
Well, and will there be different attributes to prime brokerage, to delivering that type of prime brokerage value? Is it going to just mirror what currency exists, or are there new things that are coming along with that?
I think in the currency space, you probably will see a similar pattern develop, but I think in other asset classes, you may not need that service for prime brokerage. Mm-hmm. Custody is more important to these people. So it's just different asset classes. I don't know if anyone has a different opinion.
Yeah, I mean, I disagree a little bit in that, I mean, custody is a crucial part of this, and I think it's especially challenging for the crypto space. There's a hard enough time getting banks to bank companies that do business in the crypto space for fiat, let alone getting banks to custody both fiat and crypto, which I think is we're off to a very slow start. There are a couple of regulated entities that we're aware of that are doing that. There are many that are talking about it. I do think there's good solutions coming along that will provide the technology that the bigger players that are very highly regulated will need to get comfortable with performing that role. But the key point of prime brokerage, though, is really changing how people face each other from a financial point of view to eliminate all of that counterparty and settlement risk. That's really what it's used for. If you think about the FX, in the FX world, you stand behind a tier 1 bank and you trade as an agent of the bank. Two large hedge funds are trading not in their own names with each other. Mechanically, they trade with each other. But from a financial point of view, they're trading as agents of the respective banks. So our approach to solving that problem is basically to create a technology solution that essentially replicates that and provides that same level of comfort in terms of eliminating that settlement and counterparty risk.
We've tried to do on the software side too, is create our solution of XCurrent, one of our 3 software products, that really sits behind bank firewalls, it sits in their own IT departments, it's behind their know your customer rules, it's behind their anti-money laundering rules, so that it does mirror what they're used to. Because I think that's the adoption that gets easiest for, at least in our case, for banks and financial institutions who are very loath to change. I don't know if you've been inside a very innovative bank before, but I've never heard of one.
It's a bit of an oxymoron.
Yeah, exactly.
Yeah, I'd probably add to the custody side of things, but I actually think the custody solution is an institutional grade custody solution that people are looking for. I think there are a lot of basic ones out there, but in order to act on different types of, we like to look at them at Cumberland as corporate action events. So whether it's a fork or an airdrop, well, you want to be able to capture all of that, right? Because these are essentially free dividends that are springing up left and right. So what did we go through? 2 weeks ago, we went through a Monero fork that forked in 4 different ways. 2 months ago, we went through a Bitcoin private fork, which I don't know if any exchanges are actually going to start honoring that, but obviously what we do is We house everything internally, we manage our own wallets, and we control all the forks that we participate in. Because you have an event like something like Bitcoin Cash that happened last summer, well, a lot of those folks were not able to access those funds for months and months. And so I think custody is a much more complex situation than a lot of people are alluding to. And then second thing is liquidity. Obviously at Cumberland, we're the leading liquidity provider in the space for anybody that's looking to trade really outside the top 10 coins. Let's say it's a market cap, of tens of millions of dollars, but the daily trading volume's $500,000. Well, how are you actually going to do a $5 million trade in that name? Well, you need to go ahead and face a liquidity provider that could handle that type of trade.
And how has that changed? What's the dynamic there?
Yeah, the number of coins have only increased really, right? We're sitting at about 1,500 different cryptocurrencies out there, but really with any meaningful volume, probably 50, I'd say. For us, we trade pretty much the top 30 to 35 coins that are out there. But really, again, outside of the top 10, liquidity dries up, market cap kind of dries up. But again, our business is a risk-taking business, and so if someone wants to do a transaction of larger amount, then we just kind of price it into the trade.
Okay, and is that an expanding universe for you? Is it pretty stable?
It is expanding, but we do review everything pretty thoroughly before we go ahead and trade it, right? There's like a market review that we take in terms of what exchanges are trading it, is there liquidity, and does it make sense from a business standpoint? But then there's also the legal and compliance review that goes into it in terms of what's the consensus protocol look like? Does it use a mixing service? Do you actually know that the coins that you are actually trading with the counterparty are the coins that you are going to receive from like a KYC standpoint? So a lot of different checks and balances internally.
And to what Bobby was just saying, I mean, the trading he's talking about is a lot of it is the trading that's happening off exchange or this OTC trading. We see tons of growth in that space. There's recently been a lot of media articles that have come to light talking about sort of the scope of it. Tab Group just released a report earlier this month on cryptocurrency in the institutional markets, which had some really interesting metrics. They were estimating that basically the OTC volume is something on the 2 to 3x of all the total volume we see on global exchanges. But it kind of gets back to this whole vicious circle. We're talking about liquidity. I think the nature of the exchanges themselves, the nature of the technology they're running, the flash crashes, the lack of regulation around what kind of activities are happening there, who's filling the orders, are you getting price improvement? All these issues that affect trading on exchange. And just not to mention just the incredible price impact that you have if you're trying to do a large trade like was mentioned. That will never go away until there's something that can connect all those islands of liquidity. And so prime brokerage is the key to that. One of the linchpins of prime brokerage is probably the custodial side of things. I think it is very complex and it is a very important piece of it. But currently in the OTC market, people are literally wiring funds and waiting for people to move coin. Or vice versa. And that is obviously not sustainable and again affects liquidity. It's part of that cycle because you can obviously only transact with people that you feel like you have a measure of recourse. Maybe the other prop shop down the street. You're not going to just pick up the phone or get on Skype and do that kind of transaction with anybody.
Is that true, Bobby?
I guess it's TBD. There are a lot of platforms out there that are trying to attack. Well, the solution that a lot of these platforms are trying to solve for is that pricing is so fragmented that, well, you want to centralize pricing. Well, what if you have 50 different price aggregators and different execution platforms? Well, in my mind, that's just going to continue to fragment the market. And so a lot of these folks are actually looking for price feeds or data feeds from different liquidity providers in the space. But to be honest, we haven't seen one platform that kind of really we think is going to lead the charge. And so we're taking a more mindful approach in terms of how we interact with these platforms because, again, it's all uncharted waters.
I think you'd have an interesting perspective on this from Ripple, sitting where you do in the ecosystem.
I guess what I was just thinking too is that from what I observed in my lengthy 6-week career at Ripple, is that but in this space and in this company, it makes me an old timer in some places. It's interesting to see. That there's also, we think of liquidity also in terms of where it is. And because our software solution is really about moving money from one place to the next, and we're trying to solve around this problem that you can send a text message in 3 seconds or an email in 3 seconds, but it takes you 6 days to send $10,000 from here to Mexico City. So we need liquidity of XRP in the case of Ripple, both in the US and in Mexico. Well, that's not a real problem. South Korea is great. But what's going to happen when we're dealing with Switzerland? Or what's going to happen when we're dealing with, Moscow's pretty good too, but we're really thinking about sort of pairs of currencies, and we need liquidity in all the markets in which we're transacting. So to have global liquidity to go from dollars into whatever coin isn't so important to us as to have liquidity from whatever the fiat currency is in that place to XRP. And we're working to build that both through our sales of XRP and to help develop and help. We really look at the market makers as partners. We really want them to be very active in a lot of places so that all of our banks that are using our software can access liquidity through those different market makers in all those different countries.
And Ted, what's the perspective from Alpha Point?
Well, I think, to step away from the OTC side, which we're aware of course, but just to get on the more retail side or on the asset management side, some of our big tier 1, tier 2 customers are actually creating a lot more fungibility around this. So what they're saying is, look, you can invest in this basket, you can have a portfolio view, we'll invest on your behalf, or you may do it through these trading interfaces. So there are some very sophisticated consumer and sort of institutional type trading interfaces coming out where baskets are created by the consumer and shared with each other, or the trading environment. So that isn't a form of liquidity like we were talking about, but it is a form of liquidity. It means that people are going to begin to share and trade across these platforms. And it also means that these customers of ours are building connections to things like Visa, MasterCard, and other things. So not only the money going in, but the money coming out. So that's fungibility. That's, I've invested, I've made some money, I want to use that money to buy a boat. And that's exactly where they're going this year. They're building
Very big boat.
Yeah, you can buy a very big boat.
Hopefully.
So I want to ask one more question, but we'd also like to get your participation too. So think if you have questions to have, hopefully there's some microphones out there. If not, we'll just shout. But looking forward, what do you see as the next big things? I'm trying to find a better way to say that, but what's getting you excited about where the market is developing for infrastructure and liquidity?
This might not be like the popular answer, but I think we're really hopeful and excited about kind of clear regulatory guidance on the whole industry. But we'll start with certain sectors, that's fine. I think there is, we have conversations with institutions every single day, and there's a ton of folks sitting on the sidelines for a lot of ancillary reasons, but the main one being is we don't know the rules of the game by which we're going to play by. And so if you don't have that, then how can you build a business around it? And so we're really excited about that, hopefully this year into next year, in terms of being able to really kind of build a lasting business around the rules that the regulators put forth and being mindful about that stuff.
And do you see self-regulation as a key part of that?
People have talked about that. I think one of the aspects of and benefits of Bitcoin being kind of having a non-governance type of model. People are taking upon themselves in terms of an SRO to do so, but there are different pockets that are starting to form to build these out. And it's really tough when this is a globally traded product, traded 24/7. You're dealing with state regulators, federal regulators, and regulators from all over the world. So how do you have one concise voice to string that together? Well, hopefully someone smarter than me can figure that out.
Yeah, well, on the other side of it too, there's what's the estimates on the amount of fraud in ICOs is astronomical.
Yeah.
So.
I'm certain we'll continue to see fraud. Among my predictions is that maybe we won't see regulatory certainty. We'll have some ideas of some things that, the SEC is really good at determining what a security is, right? They've been at it for, depending when you start your clock, at least 70 years. But I think that they're not going to create super clear lanes because the bad guys are going to find their way into those lanes as they always do. I mean, I have a background as a fund manager, particularly focused on the short side and finding fakes and frauds and failing businesses. And I guarantee that they have certainly found this space, and not just with products like ICOs, just with straight old equities that are ridiculous. But I think that there's clearly demand from two important places, right? This conference, is the way it's set up, sort of exhibits that. which is to say technologists are coming to this area and this arena and this technology of blockchain because they see it as the solutions to a lot of the problems that the internet couldn't fix in sort of 1.0 and 2.0. And I think that that's really important because at the same time you have a lot of financial interest coming to this where people want to invest in it. Institutionally, I feel like the institutions are just waiting with their faces in the window trying to get into this thing and waiting for some of these important issues around custody. I think there are important accounting issues as well in terms of banks and the way that they count the assets that they hold in their books. Capital requirements are so important to banks, some more than others. If this doesn't get counted as capital because their accountants because GAAP accounting doesn't yet allow for that, that's also, I think, a hindrance to this industry. But I think that those things do get solved sooner rather than later.
Yeah, I think exciting for us, in addition to what we're seeing in the growth in pure crypto markets and the adoption of that, is the physical assets, so the things we did with the CME and the Royal Mint and gold, but real estate, art, and what we're finding is people are getting smart, right? They've got their lawyers around the table, they've got their accountants around the table, regulators around the table, and they're saying, okay, if I create an SPV around this Rothco for $12 million, can I fractionalize the investment in that vehicle and let people invest in it? So that's a customer. But there are things like private shares of private companies. I mean, I think about our companies, right? And going to raise capital funds from the previous round of speakers here who were VCs is a long process, and it can be very complicated. Whereas the Jobs Act is just sitting there waiting to be taken advantage of, and it hasn't been taken advantage of yet. So we think about this $5 trillion private shares market and the tokenization of that as a really well-structured, organized place. It just hasn't been done yet, and that's why we're approaching that market. So that's exciting to us, is combining these markets together and making them fungible, but also addressing markets that are already regulated with this technology.
And that's really just exacerbating the trend that's already happening to alternative forms of finance and in non-banked type of solutions. So it's getting on that wave. Rosario, do you have any
Yeah, I mean, I think
thoughts?
I think it would be nice to get some clear regulatory guidance. I think that'll be a big trigger of a lot more institutional money coming into the space. It's certainly one of the necessary ingredients. But I think the next big thing is sort of at the crossroads of tokenizing assets, in particular fiat. I think that's an important part of this. It's one thing to trade crypto for crypto and to do that in a capital efficient and fast way. I think that asset tokenization coupled with organizing all of the liquidity, whether that's dark pool, lit pool, OTC liquidity, not just aggregating it for the sake of getting those price feeds, but actually making it actionable. And I think finally, very much tied to all that is sort of provability. If you look at sort of the current exchanges out there, you don't have provability of the existence of the assets on a real-time basis. You don't have provability of the transactions that are happening underneath. I think if you're an institutional fund manager and you're dealing with a 2-year-old organization or a 3-year-old organization, or organizations that are not based in this jurisdiction and not regulated in ways we might like them to be regulated, it's a bit of a stretch to get a PDF and say those are the assets and those are the transactions, and you got to talk to your fund administrator, and your auditors and all the rest. So I think it's very tightly linked together, and I think there are solutions definitely coming. There are a lot of people working on solutions.
Okay. Do we have any questions in the audience? Right here comes a microphone. Right here in the front.
My question is, do you see any systematic risks other than stuff pertaining to regulation, happening, resulting in a negative effect, for the overall market this upcoming year or anything? Just because I'm asking that because I feel like a lot of people maybe or might not but I feel like a lot of people expect regulation to slowly implement itself in the right way, we hope, and then from there we just see an increase in the overall market cap. So my question is there any other systematic risks that maybe we aren't thinking of that you might see possibly not allow us to have that straight path that a lot of people assume will happen after regulation is implemented?
Systematic risks that have not been identified?
I mean, that's not regulation. Yeah, I mean, I think that if people start to lose a lot of money on these scams, right, that actually poses a great risk to those of us trying to operate things that are not scams, because it starts to sully the space and it starts to sully interest. we've got customers, we're selling software to banks all over the world. And we've got some custom forward-looking people within these institutions, even if the institutions themselves are not very forward-looking, who are really, who see and read about things, read good things and exciting things about blockchain writ large, and say, wow, that could solve a lot of problems for my business, so that when we walk in the door with a software solution that helps them or could help them, they say, that's what I've been looking for. But if they continue to read stories about fakes and frauds and liars and crooks, I think that really hurts the business. So I'm not saying the regulation is a solution there, but I do think that bad actors start to sully the space, and it makes it hard for people who want change to happen using new technologies. Are going to have a hard problem selling into an environment that sounds like Sodom and Gomorrah.
It has to pass the Howey test, right? And that's really, I think that's at least for us even.
Well, we're not. I mean, I don't know that things that are security should be regulated as securities. Things that aren't shouldn't be. I mean, XRP
right.
isn't a security and won't be regulated as a security, I suspect. But I just think that what I'm really worried about are just the flat-out frauds and the widows and orphans whose money they're going to take, and that could be bad news for the space.
I think adding to that, I think last week there was an article about how Bitum, which is one of the Korean exchanges, arguably one of the largest Korean exchanges, manages about $9 billion, alluding to customer funds. It's kind of scary. They have a large target on their back. And the other thing that you see in capital markets is division of responsibilities. What I mean by that is exchanges today in the crypto world are the exchange, the custodian, and the clearer. In the traditional world, you have the exchange, NYSE, NASDAQ, you have the clearer, the DTCC, and then you have the custodians, which are Bank of New York and State Street. So that division of labor has not been kind of separated out, and so the attack vectors on all of these exchanges, I mean, it's pretty much endless, and so that's what kind of keeps me up at night in terms of just risks, and obviously we face that risk every single day in terms of funds that we have on exchanges related to trading.
Anyone else? Question? There we go. Shorting. And the question is? So the question was shorting. Are there new financial products?
I mean, from my point of view, I think it's another one of those essential pieces of a properly formed institutional grade marketplace, right? I mean, there are certainly funds out there that are holding significant inventory. I know of one fund that we're talking with that has significant inventory that actually makes quite a business. They actually have another fund that they run off the returns from the short lending of the inventory that they're holding. And I think it's the jobs of guys that are putting together the capital markets infrastructure to support this space, to tap into that and make it available so that you can actually put on a meaningful position without things like the exchange putting it up themselves or doing sort of a peer-to-peer kind of approach where you don't really have the ability to do it at scale. So I think it's definitely coming. It's certainly something that we're working on.
It's happening right now. I mean, I met with Genesis a few weeks ago, and they're market makers and registered market makers, and they're lending out securities to short. So, or securities, there we go. They're lending out certain assets, digital assets, some coins and so on, to short in the same way that they would short securities that I did when I ran a short fund. So they're doing exactly the same thing, and they're allowing it to happen right now. And I think that that's only going to expand as inventories are there, and they recognize, as market makers recognize it's a way for them to make some more money.
Yeah, I agree. Obviously, the secondary rates that you're going to get on borrow are astronomical, anywhere from 10 to 20% right now. But at the same time, venues are starting to open up, and
if it's going to go down 21%, you'll make money there.
Rates should collapse, but right now you can go ahead and short Bitcoin if you'd like via futures contract. So that evolution, I guess, happened in Q4 of last year, and so I think more and more of these things will start to happen, allow people to express their views either which way on the market.
Well, and that's the other question, right? Is when are there more futures contracts beyond Bitcoin, right? When does it expand to Ether? When does it expand to XRP and Litecoin? Those most traded assets. And I think that's going to start to create lots of potential financial markets that go well beyond being long or being short or being long the future or short the future. Puts or calls, whatever you want to think about it. I mean, that's going to enable products such as lending products, right? Banks sell off their risk by being, by essentially being short something or long something over the long term with contracts going out with currencies right now. They can't do that with crypto, but they will be, once they're able to do that with different types of crypto, then there'll be different kinds of lending products out there because they're able to hedge off that risk.
And there's many who say in the Bitcoin hit its high in December and came off. Is it a coincidence that at the same time that futures came in, you finally had the ability to short things? It brought some rationality, or at least took some air out of the bubble. We'll never know for sure, but
Yeah.
the timing was there. All right, we just hit the red light. Our time is up. It went too fast. You guys were great. I thank you very much to all of you for the panel, and thank you for listening.